Welcome back to the Digital Asset Report. Crypto markets ended last week on a rough note, but started this week with a bounce. Bitcoin, which dropped to $80,000 on Friday, rebounded Monday morning to near $89,000. The recovery comes as attention shifts to new signs of U.S. mining expansion. Eric Trump shared a video from American Bitcoin, a Texas-based mining company using domestic energy to power its operations. He said the project shows that cryptocurrency is tangible and thriving on American soil.
Hey friends, Eric Trump. Welcome to American Bitcoin. It's a little sneak peek of our facility in Texas using American energy to mine Bitcoin right here on American soil. We could not be more proud of this facility. 35,000 of these servers right here, all liquid cooled, securing the network, mining Bitcoin. Every single day we mine about 2% of the world's Bitcoin supply, and we safeguard it every single day. So when people say that cryptocurrency is intangible, it's not. It's very tangible. And this right here, guys, is living proof.
Ethereum's comeback, however, isn't without concern. Founder Vitalik Buterin warned that growing institutional control, especially from giants like BlackRock, could threaten Ethereum's core values. He said big funds could push for technical changes that make the network faster for Wall Street, but harder for everyday users to run. His message is this: Ethereum must stay open, global, and permissionless, not a tool for high-frequency trading. And in fun news, Franklin Templeton launched a new XRP ETF on the NYSE Arca under the ticker XRPZ. It tracks the price of XRP and joins a wave of new crypto funds from Grayscale, Canary Capital, and REX shares. Franklin says the goal is to offer secure, transparent access to digital assets for both retail and institutional investors. But not all banks are on board the crypto boat. Strike CEO Jack Mallers says JP Chase suddenly closed his accounts without warning. The move reignited debate over crypto debanking and whether the old Operation Choke Point 2.0 is still alive even after President Trump banned it earlier this year. In Asia, Japan's largest asset managers, including Daiwa, Nomura, and Mitsubishi UFJ, are preparing to launch crypto investment products. Regulators are considering rule changes that would allow cryptocurrencies inside investment trusts for the first time, along with lower tax rates to match stocks and bonds. Analysts say these moves could help Japan become one of Asia's leading crypto hubs. And back in the US, the Federal Reserve is divided ahead of its December meeting. Some officials want to cut rates to support a cooling job market, while others warn inflation remains too high. The split has made markets volatile as traders react to every new data point and Fed comment. Institutional sentiment also turned cautious. CoinShares reports that global crypto ETPs saw $1.9 billion in weekly outflows, the third worst stretch since 2018. Most redemptions came from Bitcoin and Ethereum funds, though XRP products saw inflows following Franklin Templeton's launch. Still, innovation continues. Grayscale launched the first ever Dogecoin ETF trading under the ticker GDOG on NYSE's Arca. The fund gives regulated exposure to Doge and could bring meme assets further into mainstream finance. Meanwhile, Ethereum powerhouse BitMine also made headlines. The company added nearly 70,000 Ether, investing another $200 million and bringing its total holdings to more than 3.6 million ETH, about 3% of the total supply. And BitMine said the downside risk is limited and that it sees a super cycle ahead for Ethereum. And overseas, the European Central Bank issued a warning about stablecoins. It said the market's growing concentration, dominated by Tether and Circle, poses a risk to the global financial system. The ECB warned that a failure of just one issuer could ripple through US Treasury markets and banks worldwide. The bank called for stricter rules before stablecoins gain wider adoption. Markets might be a little shaky right now, but institutional growth, regulation, and innovation are all moving steadily forward. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.